Hey everybody, Tim Albrecht here, and welcome to this week's episode of the Ask a YFP CFP segment of the Your Financial Pharmacist podcast, where we feature questions from you, the YFP community, to be answered by one of YFP Planning's fee-only certified financial planners. Before we jump into today's question, I want to give a shout out to YFP Planning's incredible team that makes this segment possible. YFP Planning offers fee-only comprehensive financial planning that is customized to the pharmacy professional. You can learn more and book a free discovery call by visiting yfpplanning.com. Again, that's yfpplanning.com. Okay, this week's question comes from Sarah and the YFP Facebook group. She asks, I have a divorce conundrum. My kiddos are little, 1 and 3 years old, so our lawyers told us to mediate later for college. My daughter, our firstborn, has been gifted my ex's GI Bill from the military for free college, which covers all of it. However, he can allocate the percentage to any of his children, so I'm preparing for the worst, thinking he'll allocate to my son and any future children he has with his current partner. Our plan while married was GI Bill for daughter, then 529 for our son. If he changes the percentages, it's going to be all screwy for me, so I'm wanting to be prepared. My questions are, number one, if I start a 529 in Connecticut, can that 529 roll into a Roth? And second, if I decide to contribute equal amounts to both my kiddos and my ex stays true to his word and gives our daughter 100% of his GI Bill, can I roll her 529 into my son's? Tim Baker, difficult situation. What are your thoughts here?
Yeah, and Sarah, apologies that you're in this situation. Never a fun thing to go through. So hopefully this turns out okay on the back end. So, and I am not a CDFA, so there is a designation that is strictly related to divorce and things like that. So I can really just speak to some of the questions that are at hand regarding the 529. So the first question is if I start the 529 in Connecticut, can I roll that into a Roth or just certain 529s? So the answer to that question is yes. So I am. It's funny because I was having a conversation about this over the weekend, Tim, with kind of higher education and how to fund this, and this is just with a friend, and
I feel like you and I talk about that
um,
every time we get together, I think.
we talk
Yeah.
about this a lot. And even though I'm not necessarily going to be that parent that says you have to go to college, you have to go to college, um I'm still pro 529 because I think that where they are and where they will continue to evolve to will allow for as maximum flexibility, I think, with what to do with the funds. So the benefit of the 529 is that you can get state tax deductions depending on the state you live in. So I looked up Connecticut. Contributions are deductible for Connecticut for income tax purposes up to $5,000 a year for a single return or $10,000 a year for a joint return. If you're head of household, it might be $10,000, which Sarah might be in this case for a few years. And then if you exceed this amount in terms of what you contribute, you can carry over the excess amount for the 5 taxable years following the deduction. So that's kind of at the state level. At the federal level, the changes brought about by the Secure Act 2.0. This is the Setting Every Community Up for Retirement enhancement that was signed into law by President Biden in December of 2022. This allows what Sarah was asking about. Can I move the funds from a 529 to a Roth?
Mm-hmm.
And effective 2024, so it's not quite in effect yet, but effective 2024, you can. So the transfer must be directly from the 529 to the Roth IRA in the same person's name.
Mm.
So if this is a son or a daughter, the 529 has to be named the same as the Roth IRA. The other big thing with this is that they go over in kind. So it's basically like a dollar for dollar or an investment for investment transfer. That beneficiary, so your son or daughter, has to have compensation. So hopefully if they're at college years and there is some compensation for them to be able to do this. But the big thing here, which is where I would be looking to do this, is the 529 must be maintained for 15 years. So if your
Mm.
kids are young, this obviously works because you're going to have a good amount of 1 and 3-year-old, and when they're 18 they're going to be going off to college, so that should be okay. And then the weird one quirky about the rule about this, Tim, is that there's a kind of a new 5-year rule. So any contributions to the 529 within the last 5 years are ineligible to
Mm.
be moved to a Roth. So if they're 13 and you're, contributing from 13 to 18, you have to wait a year to remove. It's just a
Why
weird
not make
thing.
this complicated
I
to
know.
manage?
And then the last thing is that the maximum lifetime transfer to that beneficiary is $35,000. So a lot of people are like, oh, that's it, $35,000. But I would say that, when they look at the, 529 accounts out there, most of them have an average balance it's like 21,000. That's kind
Yeah.
of the average. So that account that, is typically okay for most. Now, the one question is, can I move this to another 529? And back in, I believe, 2018, they made that change. So you can change the 529 to yourself.
Hmm.
If you want to go back to school in the future, you could change it to another kid. You can change it to a nephew. You could change
Yeah.
it to a grandkid. So my thought, Tim, is that even if let's say Liam grows up and he doesn't want to go to college. Um, so we're like, okay, what do we do with this 529? Well, I'm assuming that we don't have any kids after that. We kind of have X amount of dollars. We can roll 35,000 that over to his Roth IRA and kind of get him started there. And let's pretend, and I think that they're going to expand that, but let's say they don't, and let's say we have $50,000 in that account. What do we do with that 15? For me, in my brain, I'm like grandkids. Like that's
Yeah.
that's a legacy for grandkids. I don't look at that as lost money. So I'm very much pro 529. There are the big thing with 529s that people don't there's a tax benefit, but it also grows tax free. So if you do this in say like a brokerage account, you're going to pay capital
Yeah.
gains tax on that money that's already been taxed anyway. So most people, long-term capital gains tax is going to be another 15%. Um, Now, if you do an unqualified distribution, then you're going to get a 10% penalty and then have to pay the taxes on top of
Hmm.
that. So we want to avoid that. But things like scholarships, um, or if my kids get accepted to a military academy, my alma
Hmm.
mater, West Point, you get to take non-qualified withdrawals up to that,
Hmm.
scholarship. So there's lots of benefits that I think that I wouldn't get too hung up on. Is this money ever going to come out? Because usually the balances are not as big as we think unless you're
Yeah.
hyper focused on that. And secondarily, there's just a lot of outs. So the tax benefit today and then the growth of that account
Yeah.
allows for flexibility. So can it be rolled over to an IRA or a Roth IRA? Yes. Can it be a transfer to another 529? Yes. And I think the second question was, um, if I decide to contribute equal amounts to both kiddos, can I roll her 529 to my son? And the
Hmm.
question to that is yes. So I would be funding this as a backup plan, plan A, plan B. I think where parents sometimes get tripped up, Tim, is like, how much should I be
Yeah.
funding? Um, and the equation here is not just saving for college, which we're talking about now. It's saving on college, which as your little ones grow up and they're starting to make the decisions about that, what university, what college do they consider, given FAFSA and in-state, out-of-state rules, all that kind of stuff. So, um, yeah, just a complex question.
And we'll link in the show notes. We've talked about 529s a few times on the show. Episode 211, we talked about the ins and outs of the 529 savings plan. We also have a post on the YFP blog, 7 things to consider before starting a 529 plan. So good background information there. Tim, it feels like 529s and the rules around 529s, here we're talking about the Roth conversion, not too long ago, the expansion to allow it to use for K through 12 on the private education side of things. It feels like the the guardrails are coming off a little bit in terms of the friendliness around 529s and really trying to make these a more attractive option for people to consider.
Yeah, I mean, even even one of the crazy things, I think this was in 2020, they said, before, like if I had $5,000 sitting in my 529 and I had a $5,000 student loan balance, I couldn't use my 529
Right.
to pay that off, which
Right.
is crazy. Now they've changed that.
Yeah.
Now, Tim, the lifetime maximum for that is $10,000, which I still think is
Yeah.
ridiculous. I think they should be able to, dollar for dollar,
Yeah.
move that over and pay off that bill. But I think they'll continue to increase some of these limits. But then, I think when I first started learning about 529s, you couldn't even pay for like a laptop
That's
for school for
crazy.
that.
Yeah.
Or, it was really just tuition and fees and not like, any of these, extras that we now,
Yeah.
are part of it. So, yeah, I mean, I think for the tax reasons both today and in the future, and I think the continued flexibility that I think, again, this is just me
Mhm.
talking, they could go the other way,
Yep.
but I don't think that's the case, just because I think of where the level of inflation related
Mhm.
to education expenses are. I just think that they're going to continue to expand our ability to use these tax preferred buckets like the 529 to mitigate some of the expense.
I would love to be in the room, Tim, with the staffers that are drafting up this legislation where, first draft, it's like, okay, Roth can like, oh yeah, this is pretty straightforward. Let's add in all of these stipulations to make it confusing and make sure people have to track this or that. And I think that that's the unfortunate part here, right? Is we've got, the headline story, which is good. We're able to have some more flexibility with this. And then we've got some of the wrinkles that we got to make sure we're paying attention to those rules. So
Yeah, and I know it's like, you're kind of writing legislation in windows, right? So we talk about this
yeah.
with PSLF all the time. Is everyone's scared or was scared for a while, and I think there is still there's some
Hmm.
people that are scared. But every piece of legislation that you're written is like you're writing as if it's a future borrower. And I think because of that, the reason that they do that, and then it layers these complexities on, is that if you're a citizen and you're acting a certain way or behaving a certain way with regard to your student loans or your education funds, and all of a sudden they change it,
Hmm.
then that can be really bad. So I think what these pieces of legislation do is that they kind of have to write it in windows of
Yeah.
time, and that's why it becomes really um, kind of onerous to manage and to understand the rules and things like that. Yeah, I agree though. Sometimes I look at these and I'm like, you got to be kidding me. But it is what it is, and I
Mhm.
think again, if it ultimately benefits the the in our case the client, like I'm down for that.
Yeah,
So
yeah. Great stuff, Tim. Sarah, thanks again for taking time to submit the question and being a part of the YFP Facebook group. For those that have a question top of mind, we would love to feature your question as well. You can submit a question by sending an email to info@yourfinancialpharmacist.com, or you can record your question by visiting yourfinancialpharmacist.com/ask YFP. As we wrap up this week's episode of the podcast, an important reminder that the content in this show is provided for informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding material should not be construed as a solicitation or offer to buy or sell any investment or related financial products. For more information on this, you can visit yourfinancialpharmacist.com/disclaimer. Thanks so much for listening and have a great rest of your week.